Once again, the market has spoken, and telehealth stocks were pack leaders for the TSX this past Friday, with CloudMD really taking the lead on a 5.86% gain during the trading day, placing this stock's year-to-date return at well above 250%. So in today's video, by popular demand, I dropped the other video I was in the process of making to speak about what the heck's going on with CloudMD, why it's rallying so much, and share my thoughts on what I'm going to be doing moving forward. I really hope you enjoy the content of today's video. If you do, please take 2 seconds to drop a like. It really helps the channel out. And on that note, let's get right into today's video. Hey, what's going on, everyone? It's Griffin here, and I hope you're all having a great day as always. If you're new here, then welcome. On this channel, we speak about all things investing, from stock market news, specific company analysis like today's video, real estate, and so much more. So if you're looking to expand your knowledge and grow your wealth through investing, make sure to subscribe to the channel and hit the bell button so that you're notified whenever I release new content. And also make sure to check out the links down in the description to open up your very own brokerage account with either Wealthsimple Trade or Questrade, and you'll get some free money simply for doing so using one of the 2 links down below. Now, for today's video, I've had an unreal amount of requests from the audience to comment once again on telehealth stocks, more specifically CloudMD, ticker symbol doc.v on the Toronto Stock Exchange, and doc.rf over the counter in the United States. And this is mostly as a result of the stock really rallying over the past week or so, and most of these requests were as a result of me releasing that recent video speaking about WELL Health, which is also a Canadian telehealth company. In Canada, both WELL Health and CloudMD are really the 2 main players in the telehealth space, and so for this reason, I've been following both of these companies' journeys in the market up to date, because honestly, I really believe in this industry as a whole and believe that it's going to provide great investment opportunities long term, even more than it has year to date, which has already blown away expectations. As you're most likely aware, I'm personally invested in both of these telehealth companies, and I showed you my position in WELL Health as of that last video, so make sure to check it out if you want to know more information about that company and my overall position on WELL Health. But let me now quickly show you my overall position in CloudMD to give you a reference point on what I'm speaking about here. So here it is. I have 450 shares of CloudMD that I purchased over the summer, and I haven't actually bolstered my position since then, for an average cost basis of $1.20 per share for a roughly 125% return on investment. Now, obviously, as this usually goes, I definitely wish I would have purchased more shares of CloudMD over the summer when it was trading at around $1 per share. However, my reasoning for doing so is pretty much the same as with WELL Health, in that I was really just waiting to see Q3 earnings in order to further bolster my position, to know where this company is going from a revenue increase standpoint, a liquidity standpoint, and an operating income standpoint. And the exact same logic that I had for WELL Health still applies here for CloudMD, because the reality is that Q3 earnings are being released on November 30th, which still gives us around a month and a half of trading. Since CloudMD's release of their Q2 earnings on August 31st, 2020, which reported for the 3 months ended June 30th, 2020, well, the stock has already rallied by another roughly 82%. In more recent trading, the stock has also gained an extra 40% in value since October 8th upon the release of some news that we'll be covering today, but no real concrete numbers have been released for CloudMD. Basically, what I'm saying here is that this type of trading is mostly on speculation of very positive upcoming earnings, but remains just that, speculation. I will say this though, I do very much think that CloudMD's Q3 earnings will be their best yet. It just makes sense based on how the whole medical situation is playing out worldwide and in North America, and for the overall user adoption of telemedicine and hype that this is really having right now in the market. But regardless, just be mindful that this is not concrete numbers. This is still just speculation and investor optimism being at all-time highs. It's not completely out of the ordinary to see a stock perform poorly based upon worse than expected earnings, AFRIA, so just keep this in mind for pretty much all your positions, CloudMD included. Alright, so at this point in the video, typically I would do an overview of the company's business operations and really just what they're all about to give you some added context, but since we've already spoken about CloudMD multiple times on the channel, I'm just going to expedite this video and leave links down in the description to those videos covering a full company overview as well as financial overview that you should watch after this video. And I highly recommend that you do in fact watch those videos, because we cover all of the really innovative ideas in the health space that are going to propel this company into massive success. Basically though, their main product is a telehealth application where patients and medical professionals can connect at a distance for further streamlining of patient care and diagnosis. This is definitely a product I think we can all agree that we wish we had years back, but finally some companies are stepping up to the plate and providing us with this really useful tool. Alright, so again, there haven't been any financial figures released for CloudMD since my last video, but obviously something is exciting investors, so let's cover what those are right now. First off, CloudMD is obviously a company that's going to be following the overall waves and trends of what's going on in the medical space as a whole, with virus cases picking up as of late. Again, this is something that's actually beneficial for a company that operates in the telehealth space, both because there's going to be more individuals who are actually sick and seeking care, but also because governments are shutting down business operations and encouraging people to practice social distancing and trying to take video calls for pretty much anything that you're up to, including doctor visits. I don't want to reiterate all the information we've already covered in that Well Health video, but essentially we're seeing rises in cases once again, further propelling the demand for healthcare at a distance. Both Quebec and Ontario have receded back into levels of lockdown where you can't eat at restaurants, gyms are closed, and so forth, so we're definitely not out of the woods just yet, unfortunately. I'm definitely still of the mindset that this strangely has actually a positive impact on investor outlook in relation to telehealth stocks specifically, driving up stock prices. First off, on October 8th, which was just over a week ago, the company launched their new online telemedicine service for pharmacies, insurance companies, and employers, which is called CloudMD On Demand, which has the goal of offering customers an easier, more convenient way to access virtual telemedicine. What this new service promises is honestly really exciting for all parties in that CloudMD On Demand will be a turnkey online telemedicine solution for enterprise clients, offering a seamless solution to access quality healthcare wherever and whenever clients need it. Essentially, it's going to be a way for companies that offer internal healthcare packages to provide their employees with an easy to access landing page, connecting them directly to healthcare professionals for non-urgent medical appointments. In regards to pharmacies, it's also an easy way for pharmacists to connect with patients directly. Essentially, this is a spin-off of their core product, which is the telehealth platform, but allows actual companies and insurance providers to bridge that gap between employees and medical professionals. CloudMD also states that employers are looking for evidence-based, outcome-oriented solutions that will offer virtual healthcare for employees and their family members. I honestly think that this is a genius idea that builds off of their core product anyway, so why not implement this? It makes a lot of sense. And what's more is that corporations with e-commerce websites can streamline the process for customers to see a doctor online and then refill a prescription for pickup at a pharmacy location of their choice, or have it delivered directly to their doorstep. This is definitely 2020 if you've ever seen it, having FaceTime with your doctor and then get your prescriptions directly shipped to your door. Again, I think that this is a great idea that builds off of their core product anyways and creates more services within the CloudMD ecosystem that's going to ultimately provide more value to customers. Moving on now to the second recently announced business highlight for CloudMD that really seems to have investors excited, because upon release of this announcement, the stock has shot up by roughly 20% or so, and this is their acquisition of SnapClarity Inc., which is a centralized assessment-oriented platform that provides access to primary care and mental health. Let's first get a little bit of background about SnapClarity. So this is a leading digital on-demand mental health care platform that's dedicated to creating a connected care experience that puts accessible preventative mental health support in the hands of individuals. Now, SnapClarity also supports individuals who are most in need with easy identification of risk factors, early intervention, evidence-based treatment plans, and outcome-driven results. CloudMD made the 100% acquisition of SnapClarity for $3.35 million, which in perspective here is around 1% of their total market cap. Now, the deal is also subject to certain holdbacks, such as up to $975,000 in cash and up to $2.375 million in shares of the company, to be deemed at a deemed price of 70 cents per share. This is actually interesting to me in that they are purchasing a company where 70% of the acquisition is made through shares of the company at 70 cents a piece. This means that SnapClarity is receiving roughly 3.329 million shares of CloudMD, and at a current market price per share of roughly 3 times that, this seems like a pretty stellar deal for SnapClarity. With that said, I think the acquisition of Snap Clarity does in fact warrant some investor excitement, especially due to the fact that this past year has been very mentally difficult for many individuals. The global pandemic leading to increased at-home time has really been a catalyst for increases in mental health illnesses and has created a prevalent need for alternative options to deal with them. I think this was a great move on CloudMD's part by further expanding their reach in different facets of the medical services space. This is obviously a company that is very forward-looking and is looking to capitalize as much as possible on this shift towards digital for the health space. Alright, so there definitely have been some exciting things going on for CloudMD as they continue to expand their operations and grow their user adoption, but let's now take a look at their stock quote to see how it's being valued in the market. At market close on Friday the 16th, the stock was trading at $2.71 a piece, which was up 5.86% in the trading day. This translates over to a now market capitalization of $357.761 million, and as we can see here, the stock is trading just below the 52-week high, which was reached earlier on this week. Now, something that I was somewhat reluctant about regarding these telehealth companies is the fact that they aren't yet profitable, resulting from the regressive growth trends and reinvesting of all of their earnings, but for this reason, we're very much basing ourselves off of price to sales and revenue growth. At this new price point, the company's price to sales ratio is now 34.22, which is very high. In fact, I had found that the price to sales ratio of around 23 at the time of filming the last video was already quite high for what the company truly was as of yet, and again, my mentality here hasn't really changed. In contrast to this, Well Health is also trading at a price to sales ratio of 31.37, so the way I see this is that CloudMD most likely won't be rallying significantly more than it already has pre-earnings release, but then again, who knows right now in this extremely optimistic market. Alright, so with all that said, yes, this company is extremely exciting and is showing a tremendous revenue growth quarter over quarter and year over year, but let's just keep in mind that at the current market valuation, it is priced at a very high price point. As mentioned earlier on in the video, I am currently holding CloudMD stock and I'm very bullish on the company long term. I have no doubt in my mind that over time, this will become a multi-billion-dollar company. Billions and billions and the stock will probably surpass $10 a share. However, all I'm really saying is that in the short term, due to extremely high investor optimism, that has shot up the price point to a point now where we're seeing 34 times price to sales ratio. It wouldn't necessarily surprise me if earnings aren't necessarily as high as expectations. For the stock price to either stay stagnant or continue going up a little bit in the shorter term, CloudMD is really going to have to show up on November 30th with some great earnings. Again though, if you're optimistic on the company's growth and the industry's growth over the long term, well, these shorter term price corrections really aren't going to matter in the bigger picture, other than potentially giving you an opportunity to get in and lower your overall cost basis on the position. And finally, I really do believe that CloudMD is on the right path for success through providing applications that are really going to be impactful and useful for patients moving forward. Make sure to let me know though what your thoughts are on CloudMD and the overall telehealth space in general down in the comments. I'd love to know what your thoughts are so we can start up a conversation. If you enjoyed this video, make sure to drop a like. It really helps the channel out. Once again, I'd highly recommend that you check out the other videos that I already made on CloudMD to get a better idea of what this company is all about from a business standpoint and what their applications offer patients. And if you want to learn more about investing in general, make sure to subscribe to the channel and hit the bell button so that you're notified whenever I release new content. On that note, thanks a lot for watching today's video on CloudMD, and I'll see you in the next one.